Hey guys, welcome back to the channel. So today we're going to be talking about day trading, right? So there was once a time when the only people who were able to trade actively in the stock market were those working for large financial institutions, brokerages, trading houses. But with the rise of, the internet and online trading houses, it's become easier for the average individual, like me, your parents, your siblings, like to get in on all this, right? Day trading can turn out to be, very, very profitable career if you know what you're doing. But it can also be very challenging for people who don't know what they're doing, right? Especially for those who aren't fully prepared with a well planned strategy. Even the most seasoned day traders can hit rough patches and get, just loss after loss after loss. So let's talk about what exactly day trading is and how it works, right? So, the basics of day trading. Day trading usually refers to the practice of purchasing and selling a security within a single trading day. While it can occur in any marketplace, it is most common in the what's called the foreign exchange or forex and stock markets. Day traders are typically well educated and very well funded. They use high amounts of leverage and short term trading strategies to capitalize on small price movements that occur in highly liquid stocks or currencies. Day traders are tuned to events that cause short term market moves. Trading based on the news is a popular technique, right? Scheduled announcements such as economic statistics, corporate earnings reports, or interest rates are subject to market expectations and market psychology. Markets react when those expectations are not met or are exceeded, usually with sudden, significant moves, which can greatly benefit day traders. Day traders use numerous what's called intraday strategies, right? Let's talk about some of these, right? So, scalping. This strategy attempts to make numerous small profits on small price changes throughout the day. Range trading. This strategy primarily uses support and resistance levels to determine buy and sell decisions. News based trading. This strategy typically seizes trading opportunities from the heightened volatility around news events, right? And then there's high frequency trading. These strategies use these crazy algorithms to exploit small or short term market inefficiencies, right? The profit potential of day trading is perhaps one of the most debated and misunderstood topics, right? Internet day trading scams have lured so many people by promising enormous returns in a short period. Unfortunately, the idea of this kind of trading is it's kind of like a get rich quick scheme, right? It's you can't listen to these things. Some people day trade without sufficient knowledge, but there are day traders who make a successful living despite or perhaps because of the risk. Many professional money managers and financial advisors they tend to stay away from day trading, right? Most of them are going to argue that in most cases the reward does not justify the risk. Conversely, those who do day trade insist there is profit to be made. Day trading profitability is possible, but the success rate is really low. This is because of the complexity and necessary risk of day trading in the conjunction with the, related, like we talked about earlier, those get rich quick scams, right? Moreover, economists and financial, practitioners, both of these people, they both argue that over long time periods, active trading strategies tend to underperform a more basic passive index strategy, especially after fees and taxes are taken into account, right? Day trading is not for everyone and involves a lot of risk, right? It requires an in depth understanding of how the market works and various strategies for profiting in the short term. While the success stories of those who struck it rich as a day trader often get a lot of attention, remember this is not the case for the overwhelming majority of day traders. Many will fizzle out and many will just barely stay afloat. Don't underestimate the role that luck and good timing play. While skill is definitely part of the equation, a stroke of bad luck can sink even the most experienced day trader, right? So let's talk about the characteristics of a day trader, right? Some good qualities. Professional day traders, right? Those who trade for a living rather than as a hobby, they're typically well established in that field, right? They usually have very in depth knowledge of the marketplace. So we're going to talk about some of the prerequisites that people say are required to be a successful day trader, right? So knowledge and experience in the marketplace, right? Because individuals who attempt to day trade without an understanding of market fundamentals, they're going to lose money, right? Technical analysis and chart reading are both good skills for a day trader to have, but without a more in-depth understanding of the market you're in and the assets that exist in that market, charts may be extremely deceiving, right? So you need to do your due diligence and understand the particular ins and outs of the specific product you're trading, right? So you need to have sufficient capital because day traders use only risk capital, which they can afford to lose. Not only does this protect them from financial ruin, but it also helps eliminate emotion from their trading. A large amount of capital is often necessary to capitalize effectively on intraday price movements. Having access to a margin account is also key since volatile swings can incur margin calls on short notice. So they also need a strategy, right? Like a trader needs an edge over the rest of the market. There are several different strategies day traders use, including swing trading, arbitrage, and trading news. These strategies are refined until they produce consistent profits and effectively limit losses, right? So then being disciplined. A profitable strategy is useless without discipline. Many day traders end up losing a lot of money because they fail to make trades that meet their own criteria, right? A saying would be plan the trade and trade the plan, right? Because success is impossible without discipline. To profit, day traders rely heavily on volatility in the market. A stock may be attractive to a day trader if it moves a lot during the day. That could happen because a number of different things, including an earnings report, investor sentiment, or even general economic or company news. Day traders also like stocks that are heavily liquid because that gives them the chance to change their position without altering the price of the stock. If a stock price moves higher, traders may take a buy position. If the price moves down, a trader may decide to short sell so they can profit when it falls. Regardless of what technique a day trader uses, they're usually looking to trade a stock that moves, and moves a lot. There are two primary divisions of professional day traders, right? Those who work alone and those, or those who work for a larger institution. I know some people who work for a larger institution and then when they get off work, they go home and they also work alone. Most day traders who trade for a living work for a large institution. These traders have an advantage because they have access to a direct line, a trading desk, large amounts of capital, and leverage, and expensive analytical software, right? A bunch of advantages. These traders are typically looking for easy profits that can be made from arbitrage opportunities and news events. These resources allow them to capitalize on these less risky day trades before individual traders can react. Individual traders often manage other people's money or simply trade with their own. Few of them have access to a trading desk, but they often have strong ties to a brokerage. And access to, I'm sure there's other resources they have, but that's probably like a really big one, right? However, the limited scope of those resources prevents them from competing directly with institutional day traders. Instead, they are forced to take more risks. Individual traders typically day trade using technical analysis and swing trades, combined with some leverage to generate adequate profits on such small price movements and highly liquid stocks. Woo. So day trading demands access to some of the most complex financial services and instruments in the marketplace. So day traders typically require access to a trading desk. This is usually reserved for traders working for larger institutions or those who manage large amounts of money. The dealing desk provides these traders with instantaneous order executions, which are particularly important when sharp price movements occur. For example, when an acquisition is announced, day traders looking at merger arbitrage can place their orders before the rest of the market is able to take advantage of the price differential. Multiple news sources. News provides the majority of opportunities from which day traders capitalize, so it is imperative to be the first to know when something significant happens. The typical trading room consists or contains access to the Dow Jones Newswire, constant coverage from news organizations, and software that constantly analyzes news sources for important stories. Analytical software, right? Trading software is super expensive, but it's also an expensive necessity for most day traders. Those who rely on technical indicators or swing trades rely more on software than news. And this software can be characterized by a couple different things, right? Automatic pattern recognition, genetic and neural applications, brokerage integration, back testing, you know, and all these combined, right? These tools provide traders with an edge over the rest of the marketplace. It's easy to see why, without them, so many inexperienced traders lose money. Additionally, other elements that influence a day trader's earnings potential are the market they trade in, how much capital they have, and the time they're willing to devote, right? So let's talk about this. Should you day trade, right? Like, should you start day trading? As everything we talked about, right? Like day trading as a career can be very difficult and it can really be a challenge. But first, you need to come in with some knowledge of the trading world and have a good idea of your risk tolerance, capital, and goals. Day trading is also a career that requires a lot of time. If you want to if you want to perfect your strategies after you've practiced, of course, right? Like make sure you like do what they call like paper trading and make money. You'll have to devote a lot of time to it. This isn't something you can do part time or whenever you get the urge. You have to be fully invested in it, right? If you do decide that the thrill of trading is right for you, remember to start small. Focus on a few stocks rather than going into the market head first and wearing yourself thin. Going all out will only complicate your trading strategy and you could take on giant losses, right? Finally, stay cool and try to keep the emotion out of your trades, right? The more you can do that, the more you'll be able to stick to your plan. Keeping a level head allows you to maintain your focus while keeping you on the path you've selected to go down. If you follow these simple guidelines, it's possible you may be headed for a good career in day trading, right? So I mean, although day trading has become, somewhat of a controversial phenomenon, it can be a viable way to earn a profit. So day traders, institutional and individual, they both play an important role in the marketplace by keeping the markets, efficient and liquid. And while day trading remains popular among inexperienced traders, it should be left primarily to those who have put the time in, right? They have the skills and the resources required to actually be successful at it. And I honestly would recommend, and I did this in a previous video too, I would honestly recommend that if you have your 3 to 6 months of saved money, like your 3 to 6 months of living expenses saved, and you're fully funding all your retirement accounts, you can make a second account with any leftover money, and it can be your quote unquote fun money, and that's what you can do to day trade, right? I said the same thing in a previous video when we were talking about trading options. So I would say that is the same thing here, right? If you're going to do something like this, definitely think about doing it with your leftover money after you've taken care of everything else, right? Because this is I'm telling you, when you get into this, if you start doing well, you're going to get addicted to it because it's just like gambling. And you don't want to win a little, win a little, win a little, lose really big. Then be like, I can make it back, lose really big. Okay, hold on. Bam, lose really big. Don't do that, right? And, a lot of people, they might try to trade on margin and stuff. Like, don't do it. Have your fun money account and start small, right? And go from there, right? So hopefully you guys got some good information out of this video. Go ahead and drop a comment down below. Like the video. Go ahead and subscribe. And until I see you guys in the next video, y'all be safe.